Hello and welcome back to the House of Trade. My name is Justin Banton and today we're going to be discussing why is gold shining again? Now for all of you die-hard long-term believers in the yellow metal, like myself, yours truly, you would not be surprised that we are back again. It seems as though the uptrend is resuming. All of those long-term movement averages and those DMAs and those EMAs and those SMAs weren't really even touched, let alone broken, and the yellow metal is resuming its uptrend. But why is it resuming its uptrend again? And why didn't we have a deeper pullback? Or is there a deeper pullback to come? Well, let's find out. But before you do, please like, share, and subscribe. I hate having to say that to you, but it is the modus operandi, and it is what seems to get the likes and the clicks and the followers and the subscribers coming up. So let's go through a few of these comments that I find really funny first of all. Still early days, in my opinion, with ridiculous G7 deficit spending to maintain anemic GDP, growth in a higher interest rate environment. The whole thing is unsustainable. Yes, I would agree with that completely as well. Deficit spenders are probably one of the hugest correlations between, or determiners and reasons why gold is doing as well as it is. Another one of my favorite comments, dollar has dropped below 1,000. Gold has climbed above 4,000 a troy ounce for the first time. Or should it be written as dollar has dropped below 1/4,000th of a troy ounce for the first time? There, I fixed it. I love it. But now, please have a look at these charts on the screen right now. But let's also talk about why gold. The uptrend is intact. It's a cyclical thing. It's a bullish cyclical sectorial play on deficit spending, on all of these other profligacies going on around the world, and the market is seeing it and it's pricing it in. And remember, historically, gold can run for like much longer than shorts can stay solvent. The last cyclical bull market lasted like 5 to 10 years, and that went up about 500%, literally. So we could definitely still be in the early innings. But I'm also very aware that anyone who talks about gold going to 10,000 or 20,000 or it not being the top, irrespective of the parabolic nature, the RSIs being overbought, all of the fib levels being overextended, all of the SMAs and EMAs being completely detached from reality. I'm completely aware that nothing goes up in a vertiginous cycle like all the while, but I'm also aware of the seasonality of gold as well. Like, have a look at the seasonality here, and you can actually see, if you analyze gold over the last 20 years, there's been very few years where gold has actually gone down. And you wouldn't actually think that gold is one of the best performing assets, because we've had a high interest rate environment, right? We've had equities on a tear, and they haven't really worked antipathetically with bonds or currencies. Like, real yields haven't really been playing like a magnet effect on gold, nor has it been highly correlated with a weakening dollar, which is normally the corollaries of what you see. But let's talk about what I believe are the 7 major reasons why gold is here to stay, as it has been over the last 4,000 years, and why the bull trend may only truly just be getting underway, and why this could be like a really secular, long-term seculum in the terminology and the vernacular of the fourth turning. Now, the first one is obviously going to be our good friend Donald Trump and the MAGA Premium. Well, I mean, gold's rally has definitely become part of the whole MAGA trades. Investors definitely expect MAGA-style politics to come alongside MAGA-style fiscal behavior, expansion of deficits, the weakening dollar, Mar-a-Lago Accord being touted, and not to mention the fact that the Treasury Secretary Scott Bessent has literally said, "I'm a gold bug. I like gold. I think we need a weaker dollar, and I think like gold is going to be bid." You can't really go against that. The MAGA movement has seen fiscal discipline go out the window. We're really seeing like fiscal incontinence de jure, and that seems to be a concerted effort. It doesn't seem to be something that is a byproduct or a symptom. It seems to be an actual concerted effort to get the dollar weaker and to like spend, drill baby drill, to expand deficits and to actually erode all trust in the United States, in its institutions, in its moral leadership of the world, quote unquote, and in all other guises of like dollar hegemony. It seems to be a concerted effort. I mean, I understand wanting to bring manufacturing back really does rely on having a weaker dollar to even make that calculus possible. But whether that's feasible or not, that's another thing. All we're looking at right now is that there's bigger spending, there's bigger deficits, and there's weaker trust in US paper assets, right? So gold is actually more of a proxy of an anti-dollar vote more than anything now. If you think about it in that kind of terms, it starts to make more sense. If we're talking about it antithetically to the dollar, then gold seems to be like the logical asset to go into, right? Not to mention the fact that we've had Ukraine and Russia, the confiscation of assets, invasions being touted for Venezuela, fiscal profligacy, the Treasury Secretary becoming the best friend who's now touted for the Fed chair job, Jerome Powell literally being bludgeoned, well not literally, but like metaphorically being bludgeoned, Lisa Cook, the Fed independents, like it's all an unholy combination and conflagration that only leads to one thing, and that's like higher prices in gold. Well, number two is, I don't know if you've heard about this, but recently there's been the reemergence of the idea of stimulus checks. I thought stimulus checks were literally responsible for inflation during COVID, sending out all of that money, that helicopter money, literally, not the sequestering and like QE, which didn't really reach the real economy. If you arguably think about it, it didn't actually reach the real economy. It worked on like the transfer of assets and the transfer of ownership between assets, the increasing of reserves, the controlling of the yield curve. But stimulus checks actually reached the economy and actually went into asset prices and actually led to inflation. But they're actually talking about another America First subsidy. Trump came out the other day and said, hey, do you know what? Like this tariff revenue, baby, I'm just gonna like send it out as checks. I mean, that is populist politics of 1.0, right? I'm going to send it out. The markets are actually actively now betting on another round of populist spending. Whether that could be tax cuts, direct checks, American First subsidies. Every dollar the government prints obviously is going to keep voters happy. It's going to push up asset prices, and gold's no different. Number three is China. China, people forget, lest we forget, was the civilization before any other civilization for like 4,000 years, right? And I quietly do believe that although China are grabbing all gold they can, and they seem to be price insensitive, I do believe that China's gold reserves are actually vastly understated. And if it ever came out in like the public realm what gold reserve China actually held, it would probably spark a new arms race, but the arms wouldn't be weaponry, it would be like gold. I genuinely believe that. I genuinely believe there's a strategic, tactical modus operandi with the PBOC and the PLA and all of the other organs of state for China to accumulate as much gold as they can and then to show their true reserves, which is going to cause internationalization and more trustworthiness of the renminbi in terms of international transaction flows. And then that's just going to cause another echo chamber and a reinforcing cyclical prophecy of gold just being even more bid, because America will never ever want to be seen as being second in gold reserves to China, not to mention the fact that that would move like bullion trade away from London and into probably the Shanghai hands, who now only represent, I think, 5% of all bullion flows and final settlement. But like, it's no secret that the Chinese central bank has been hoarding gold for years, year over year, often undisclosed, off book, and through like shadow channels. So they're diversifying out of treasuries. They're selling that shit. Sorry, pardon my French. They're building a war chest for the de-dollarization and the renminbi internationalization of the world. So that's definitely something we have to be aware of. That hasn't stopped. And it's not just China, it's central banks all over the world. It's not just Asian central banks, it's European central banks as well. And never before have we seen such a voracious appetite for repatriating your gold from American and British vaults, which to me makes no sense, right? If you want to have an asset with no counterparty risk, which is gold, why would the biggest counterparty risk be holding it in a vault of a country that can turn on you like a dime? Like Venezuela's gold reserves are still languishing in the vaults of London right now, right? Number 4, global distrust in the United States. Whatever you say, like sanctions have been weaponized, assets have been confiscated, They are no longer the neutral store of wealth and value. You can't trust them. And that's why all of these central banks and governments around the world are redenominating and re-dollarizing. You can't trust America. It's just been proven now. And what can you trust? An asset without counterparty risk and an asset that is heavily sought after and has been the currency, de jure, and the eternity forever, right? Which is gold. That's how it is. And another reason number 5, I would say why gold is relentlessly bid and never offered, bought on all dips, is there's an inherent Trump risk, and that comes with a Trump chaos premium. I mean, gold loves uncertainty, the market doesn't, but Trump brings plenty of frenetic chaos. Every headline, every indictment, every scandal, every unpredictable political stance, every throwing the toys out of the pram, every saber rattling, every Scott Bessent attacking his former boss, George Soros, every dent in the institutional manner frame that is America and the trustworthiness of the Federal Reserve and the US Treasury is just another notch on the belt of gold's orgasmic achievement. It really is. And that's how you have to start thinking about it, right? So with the Trump risk, which is never ending, gold has a constant flurry of reasons to stay well bought and well supported, right? You can't trust the institutions who really set monetary and fiscal policy for the entire world. You can't trust them on trade. You can't trust them on territorial ambitions. You can't trust them on confiscation of assets. You can't trust them on tweeting. You can't trust them on maintaining the independence of financial institutions. You can't trust them on keeping the government open. Where can you trust them other than trusting them on distrusting them? As tautological and oxymoronic as that sounds. That's really the only place where you can have consistency. The only consistent thing about America right now is to realize that they are completely inconsistent and untethered from the moralistic, I use that word loosely, or the moralistic leadership of the world and especially the financial markets as well. There is also, and I'd say this, and sometime like maybe even 2 years ago would it sound hyperbolic, but now there is really actually a narrative to be spoken of in terms of fiscal collapse. Like the US deficit is currently exploding. That's not a secret. It really is. They can't seem to implement any changes. Doge was a huge roaring failure. They managed to find out like a fraction of the money that they promised they would. And even that money was seized upon and then re-given, redistributed, proven to be illegal, not being able to be sanctioned, not being able to be really actually like used. So that is a structural issue, right? There's a structural issue in terms of deficit. And that kind of comes along with the territory of being the world's hegemon on the world's reserve currency. You don't ever really get your house in order because you don't really need to, right? Everyone needs your currency. The euro-dollar market is alive. Everyone needs to trade and settle in America's dollars. The American economy represents like, 20% of the global economy, about 75% of the trade flows are settled in dollars, right? But the fiscal collapse doesn't engender an immediate need or concern in America because everyone still needs dollars. And with the introduction of stablecoins, which is another video coming, I think we need to make another video on that, it kind of doesn't encourage them to get their house in order anyway, because stablecoins are going to remove that fiduciary and that lack of malfeasant responsibility that they actually need to have, because stablecoins makes everything a bit more opaque. But when investors realize that the debt is ever growing and there's no real political impetus or will to actually get it under control, then GDP is not rising faster than the interest rate payments. The military-industrial complex is growing at ever greater levels. The TGA account is growing by the trillion, which is going to be distributed back into the economy, causing inflation. Trustworthiness is eroding. Then fiscal collapse narratives actually make a bit more sense, right? And the last one, I would say, are real yields. I mean, real yields have always been the barometer or the natural counterparty and the natural cross with gold. But that's kind of broken down, because even with rates being as high as they are, the market knows that the Fed can't actually keep them there, right? That's probably the reason, that's probably where we should have started off with this video. Even though the market Even though the market knows that the interest rate servicing liabilities are so high, we also know that the Fed can't keep rates there. They can't afford to keep rates there. And that's why Donald Trump is so bombastic and vociferous about lowering rates. And Scott Bessent too. They know that they can't keep rates this high because it's literally crippling the United States in terms of deficit spending. Maybe they don't care though, who knows? But I reckon they do care, because that's probably why they are now funding expenditures with short-term paper instead of issuing long-term paper, right? Because they can issue notes and T-bills at a 1-year duration with much more freedom and a different kind of volatility surface and a different buyer than would be needed for buyers from 10 years and 30-year treasuries. So even with the rates high, the market knows that the Feds can't keep them there. So if rate cuts actually come while inflation lingers, then the gold plan even surges even more, right? Because everyone knows a strong dollar story is all smoke and mirrors. I think it's more to do with institutional and equity flows rather than anything systemic in terms of the reflection of the economy being bid for gold. And I guess that's where the dollar milkshake theory comes back in as well. I reckon it's all related like that. But those are my main reasons why gold is bid. You could look at it from a technical perspective as well. If you just look at the charts, gold definitely is respecting the trends of a bull market. It's definitely accumulating. It's not being distributed readily. All of the pullbacks are within constraints. We're building back up along the precious metal complex, totally. I mean, silver's blowing out, gold's blowing out, right? Everything's being respected. Dips are being bought. Accumulation's happening. Yeah, we kind of went into a parabolic phase, but if you look at the parabolic price action and patternation of parabolic moves in history, they normally come in waves. And the wave 1 is a move up. It's a settling. It's a consolidation, sideways movement. Wave 2, up. Consolidation, sideways movements. Wave 3, wave 4. And it normally resolves itself within 5 moves. We're in the 4th move now, if you look at it the way I'm looking at it on the charts. And I don't see price action being counterproductive to a bull thesis. And everything else fundamentally is aligning. I do really, truly believe that this is a once in a 20-year cycle for gold. And it's going to reach stratospheric heights, higher than anyone predicts. But the blow-up is probably going to be just as violent. But let me know what you think in the chat. I would love to know if you agree, if you disagree. Leave me a comment, let me know. I'm Justin Banton. This has been the House of Trade. Ciao for now. Have a good one.